Welcome to the Wealth Rebels show. I am your very rebellious host, Emma Wright, the Wealth Rebel on Instagram at the Wealth Rebel. And I am here to really kind of like help you to dive deeper into wealth being your well-being, your energy, your abundance, your lifestyle, your time, and your health. And if you want to know a little bit more about that, you can take my quiz. My quiz is in the show notes. It will really help you to dive deeper into understanding the parts of you that maybe you are not investing in. We've got the beautiful Pete James here today to kind of talk to us deeper on one of the assets that I really do believe enhances our wealth. We're going to go deep today on property. Pete comes into the Star portal on a quarterly basis. The Star portal is one of my wealthy resources that I've created, a community where we talk about all investments in order to enhance kind of our wealth, in order to have that well-being so that we can really enjoy our life by creating things like passive revenue income streams so that we're not just trading time for money. We're genuinely investing the money that we've made or the money that we've created or the money that we can borrow into assets that will give us wealth and also can give back to the community. So, Pete, welcome to the show today.
Thank you.
Did you just really before we dive into today, I spoke recently at the Business Fest Southwest, and you came along to that. Did you do the quiz first and foremost?
I did do the quiz. Yeah, I really enjoyed watching you talk, and it was really fun doing the quiz to find out how not just rich you are, but how truly wealthy you are. And I'm happy to say that I reported quite highly. I think I got quite a high score on the quiz, so I recommend everyone doing it. It was really fun to do. Yeah.
And that doesn't surprise me because that's one of the reasons that when we met, we met at our local run club. When we met, like literally, one of the things that stood out for you, from me when I got to know you, Pete, is genuinely how you have created a life that you love. And you really focused your time, energy, and money on preservation of your wealth, perhaps without even realizing it. And that's the thing. You are just, it seems to me, you're very naturally focused on the things that matter. And one of the things that you are really passionate about is property. And I just love the fact that you give up your time to come into my world online
Yeah.
to share your knowledge. And today you said before we came on air, you really want people to understand the markets are changing. What are the pros and cons of property as an investment? And understanding a little bit about property tax. So, what is changing? What is changing right now when it comes to the property market? What is changing for you right now?
Well, the property market isn't exactly what it used to be. There used to be this sort of golden ticket to free passive income. And the main thing that's changed in the last few years is how property is taxed, because it was very clear that landlords were basically getting free credit or free capital growth, if you like, because the tenant was paying them a rent, and then they weren't paying tax on the money that they paid for a mortgage, so they were only paying tax on their profit. But the tenant that they had in their house was paying for the mortgage. So the house is going up in value theoretically. Obviously, there's certain dips, but historically, property value goes up, which meant that the landlord is basically getting free capital growth, if that makes sense. And the government said that enough's enough. We can't have people, individuals getting rich at the detriment of the economy and of people that don't have the luxury of being able to buy their own house. So they changed the tax rules that you cannot now take the mortgage costs off your tax bill. So there's now a flat 20% charge on profits, but the mortgage isn't taken into account. So there is a mortgage allowance, which I think I just did my tax return the other day. I don't know the exact figure. I think it's about £4,500. a year, and anything above that that you pay on your mortgage, you don't get relief on. So the new system, when you look at the face of it, it seems quite unfair on landlords. Not that that's going to be a very popular thing to say for most people, but the not many people care about what's unfair on landlords or not. But it's actually a very fair system because it means that smaller landlords are paying the same tax as they were before, and larger landlords are paying a higher tax. So there's a 20 and 40% bracket. It's very complicated and very difficult to explain, and far too difficult to explain on the conversation today. But I'm sure we can go through it in the Star Portal when I'm next on there, and we can talk about the ins and outs of how it's fair. And it is quite a good system because it means that we're protecting the um, larger economy, which is obviously better for economic growth. And it means that things that aren't good for the economy but good for the individual are discouraged and taken away. So it's encouraging larger landlords to either downsize or get out of the market, which is opening up property opportunities for either smaller investors or first-time buyers. Um, so I don't see it as necessarily a bad thing, only with your return on investment, really, because obviously I'm paying about the same as I was before, but it is slightly more. It hasn't affected me too much because I only have the one property now. So it isn't so much of a problem for me, but I have spoken to people who have 6 to 10 properties, and it's hit them quite hard, and it's caused them to downsize. So that's the main way that it's changing at the moment. And another reason is that the mortgage market obviously went so sky high a couple of years ago. It is starting to come back down again now. There was a point where, especially buy-to-let mortgages were at 6.5 to 7%. They're now sort of teetering around sort of 5.5. So I saw one the other day for 4.7, which is not as good as we were able to get before. When I bought the house that I have now, I already had one house, so I was able to get a better rate because I had previous good record, which is something that the banks look at. They look at how good you are at paying your other mortgages. I had one house when I bought the house I have now, and I was able to get a better rate, but it was much lower than 4.7. So it is starting to come down, and I don't know whether it will go back up again. It's going to be dependent on factors throughout the world and world economics, but it looks like it's coming back down, so it's going the right way. But it's also another thing that you have to consider if you're thinking about going into property is the mortgage rates and the new rates of tax.
Like a double whammy, really, isn't it? And I get it. I get it. Like it was becoming, and the economy was becoming where everything was locked up. Capital and money and wealth were being locked up in assets
Yeah,
by people that were more wealthy in the economy. And then those that are, renting are usually struggling. They're usually, renting because they can't afford to get onto the property ladder.
yeah,
And, I don't believe all landlords actually, even with small portfolios, are, I know a lot of landlords that literally barely charge their tenants enough rent. They were
yeah,
they
yeah,
were fucking up a lot of the mortgage interest rates because they genuinely want to keep their tenants in place. And once they sold the property, they made people homeless because then
yeah.
that person couldn't go and find a rental. It is quite a dire time in the UK, especially
Mm,
for people, because I think a lot, I think it does seem a fair system. I will say it does feel like it's a fair system. When you explain it like that, I'm like, that's a fair system. But the reality that we are experiencing and from the government is that they have gone too low. You shouldn't just be able to have one property or six, right?
yeah,
When we're targeting bigger landlords, it should be the bigger landlords genuinely. And what
mhm,
is happening in the UK economy at the minute, and this is what I'm seeing, because I coach a lot of people that are what I would perceive reasonably wealthy. They feel poor now, right?
yeah,
To an extent where people that so many people go into food banks that should not be
yeah,
going to food banks. I know this is a little bit of a tangent here, Pete, but fundamentally, I think that it's gone too far. You know, you breaking even with one property, Pete, I think is a stark reminder that we are in a state of economy where the government needs to look at what they have done and try and make this better because we shouldn't have forced sales of property at the
Mhm.
low end,
Yeah,
where people are being made homeless and then they can't go and find a rental because nobody's wanting to be in that market now.
yeah.
Yeah, there's a lot of fear. But so let's unravel that because there's some things that you have said that it is opening up the property market for smaller investors, right? So some of
Mhm.
these people that maybe in the past would have been renters, they could maybe become property owners now. Right?
Yeah, and it's encouraging the larger property owners, the owners with multiple properties, to sell them. That increases the supply over the demand, and that theoretically brings the price down. The same as any asset. Obviously, it's great to have money in an asset when the price is going up, and the price is usually going up because the demand is outweighing the supply. It's a classic example is gold. You know, when there's a war that starts, so people hedge themselves or secure themselves by buying gold. That pushes the demand up, and then the price goes up. So if you're in the investment, it's really good when the price goes up. But if you're not, then you do get sort of priced out of the market, which is really unfair on people like I was when I bought my first property to rent out, which was 2020. When was it? 2016, I think 2017. Um, and it was difficult for me to do that. I was living in Bristol, and I owned a house in Bristol that I lived in, but I couldn't afford a second house in Bristol. It was hard enough to get one. So what I did was I looked over the bridge in South Wales, and I was looking in Cardiff and Newport, and I eventually bought a house in Newport and rented it out there because the value of the house was just lower, and it was one that I could afford, and I could also afford the tax on top. I could afford the stamp duty. I could afford to do the remedial work that was necessary to get it fit for habitation, and in Bristol, I didn't stand a chance because the demand in Bristol is so high. There's a lot of people that moved out of London in the teenies and moved to Bristol. It's a really amazing city. It's a wonderful place to live. And I really enjoyed living there. But I was so lucky to be able to own a house there because the property value there is it's still going absolutely crazy. And that's, I think, what they're trying to do. Um, any landlord that I hear complaining about the new tax laws, I think I've spoken to you about this before, it just sounds like they're greedy, because I'm thinking you might be paying a bit more tax, you're still making a huge amount of profit. Even if you're paying double the tax you were, you're still making a huge amount of profit. You're just not making as much as you used to. So to be sort of ooh poor me is a bit rich, to be honest, if you pardon the pun. it's
I
it's
know
a
I
bit
love your
it's
puns.
a bit like I can't be sympathetic for you because you don't understand that it's not just about you. It's about living in a country where things are fair and things are right, and everyday people can do what they want to do and have a fruitful, privileged life. It's not just for you, it's for everybody. So I think that's what they're trying to do, and I think it's a really clever system. Although from my perspective as a landlord, that's sort of my perspective as a person and as a citizen of the UK, that I want everyone to be able to have the things that I've been able to have, and I feel very lucky. But from a landlord's perspective, I have to look at the numbers and the logic, and it isn't the investment that it used to be. It doesn't mean that it's not a great investment. I still make a good profit from my property, and I'm happy with it as it stands at the moment. But when my fixed rate, for example, ends in a couple of years' time, 2.5 years' time, I think it ends. That might change because it might, the mortgage rates might go back up again, or they might not be down as low as they need to be for me to keep making a good profit or make it worth it. Another thing that people don't often consider when they're getting into property is how much of an anxiety and a responsibility you have to the tenants, especially if you're not doing it as part of a limited company. Obviously, the only benefit of having a limited company in property is that you have limited liability. Um, and you can only be sued to the value of your limited company. I own as an individual, so if I get anything wrong, if I cause the tenants harm by not doing the correct maintenance checks, or not having all the safety aspects in place at the right times, I'm personally liable for their well-being and their safety. So it's another consideration that you have to think about how much of a it's not necessarily that everything's going to go wrong every day, but it's always on your mind. Every single day, I think about my tenants and I worry about things that I might be able to do to um, maintain the house or maintain their safety. Or you worry about them damaging the property, which I'm very lucky. I've got amazing tenants, and I always have done. I've always found my own tenants and made sure that um, I look after them well, in the hopes that they'll return the same courtesy to me and look after the house and pay their rent. And I've always had amazing tenants, but that could change any second. It's not guaranteed that there'll be amazing tenants forever. And it is a constant anxiety in your head, and you're always worried and thinking about things that you've done wrong or things that you haven't done or things that you're supposed to stay on top of. And I have reminders always set to make sure I do the boiler service and get the fire alarms tested, everything, all these things that you don't think about when you live in your own house because you think, well, because it's only me responsible for myself, I'm happy to be complacent. I think is the usual consensus on it. But it's a very, very good investment as long as you're prepared to do the work. It's not the hands-off thing that a lot of people think it is.
I was just going to say, Pete, on that, what you've just said is it's so interesting because basically, if you if you take on a property, you take on responsibility for the tenant.
Mhm.
And a lot of people, I think, because it has been so good, people have been delegating all of that responsibility. They've had managers doing it, they get agents and they just take this really hands-off approach. A lot of people don't realize their responsibility, even if they're limited company or sole trader, whatever they're doing. And I think the market for people managing these properties as well is going to be hurt because I think we're waking up to the fact that we can't just waste money on all of these different things to shirk our responsibility. It isn't an easy asset to own. Let's own less of them and let's do take the time to do it right and make sure it is a really good investment and look at it investment by investment and choose it. Do you know what it's reminding me of the conversation that I had with Adam Brewer on the talking about the stock market. When we pick stocks, we pick them because we look at the company and we look at the outlook of that company. Is it in a good location? Is it in a good market? Do we think the prospects are good moving
Yeah.
forwards? And then we look at interest rates and economic factors that could influence that particular company. And it's a
Mhm.
buy and hold strategy, and it's looking after that asset you know, you have a way with a property, unlike if you decide to go and buy Apple shares, you buy Apple shares, you do the due diligence, but you don't have any responsibility then. Whereas
Yeah.
and that's what you can do through your stocks and shares, ISAs and your pensions. With property, it is on you. People feel a lot more like confident with property sometimes because it's a physical asset that you can go and literally put your hands on and touch. But with that responsibility, with that kind of like contact, you have a way greater responsibility to the tenant. Let me
Mhm.
tell you, not all landlords are like you, Pete. Not all, literally, that's not been my experience as a recent tenant. Okay. Um,
Yeah.
I have mice scurrying around my property and I've raised it and they're still scurrying around the property. And I know I spoke to you about it, right? And
Yeah.
you sent me my rights, which I didn't realize. So I just love how much of a responsibility you take. One thing there's a couple of things that you've said here that I just want to dive into because it is a really great time for people if they aren't property owners, and they want to be investing into something else and they have the time and energy to do that due diligence because property markets are coming down. I'm selling a property at the moment. So I had a really great conversation with Tom from Stratton Parker in Exeter. Hello, Tom, if you're listening. And we were talking about the market and even high-end properties are coming off significantly because of it filters through to the entire economy, like you say, it filters through to the entire market. And we're seeing some like £1 million properties coming down by £200,000 in the last year, right?
Mm.
And therefore, if you are thinking, well, I can't afford to get a mortgage because when we're buying property, mortgages are different from buy to let. The buy to let mortgage market looks at the investment itself, and
Hmm.
you might be able to get a buy to let instead of a mortgage, and then use that as your way of building your one of your assets, like what you did. If you can't afford to buy in Bristol, you're renting, you may be able to go and buy in Wales, or in Devon, or in Yorkshire, or somewhere else. If
Yeah,
you But you need to be able to get to that place. You need to be able to, you want to take responsibility. It might be something that you want to look at as a first time person, to start getting your money working for you, to become someone that has assets. And
absolutely.
yes, mortgage rates have come down. I just want to touch on something else that Adam Brewer pointed out. We are looking at higher interest rates for the next 10 years. We're look, Inflation, sorry, inflation kind of leads where interest rates goes. So, the way that Adam was talking was they're expecting maybe 3% inflation to be sticky for the next 10 years because of what is happening in the global economy. We're having tariffs brought in now, if we want to export and import, and that will ripple into interest rates, because
Hmm.
interest rates are the measure that the Bank of England use to influence inflation. Okay.
Yeah.
So if we're thinking that interest rates are going to go back down to zero, I would say, this is not me giving financial advice. None of this is ever advice. This is just us sharing our knowledge. I would say, forget it.
Yeah.
Get used to higher interest rates. Get used to analyzing whether it's a good investment based on the fact that now, as an investment into property, you can't now offset mortgage payments on your profit. Look at it, kind of do the due diligence and work out then what you're going to make, and see it as a buy to hold, because the even though capital gains are taxed differently as well, like, we haven't touched on capital gains tax. And
Hmm.
it would be great maybe to touch on that, Pete. We talked about.
I love talking about tax. Don't worry. We can talk
Yeah,
about
I
any
know
type
you
of
do.
tax you want.
We talked about the other night, didn't we? We were saying, it's really nice to like be able to enjoy talking about tax in a positive way, because
Hmm.
tax is just tax. It's a means to support the economy. And it is frustrating at times, but we have to look at the different aspects of the asset. We only have to deal with capital gains when we sell it. So if you
Yeah.
are looking to build an asset over time that one day you will own outright, but you're trying to earning a passive revenue from it in the now moment, you're more concerned about the income tax, which you said is 25%, sorry, a 20% flat rate on profits,
Yeah.
and then it could be 40%. Is that around, like, is that the same as like whether you're basic rate taxpayer or additional rate, high
Yeah. So
rate?
it
Is it
takes
linked
into
in
account
a
your
way?
yeah, it takes into account the personal allowance. So it's done against the personal allowance, and I think before I'm not entirely sure how it was calculated against personal allowance, but I think it was separate. So on a self-assessment tax return, which is of course what I do every year, there's a section for income from property, and it's accounted through that, but it's now amalgamated with your personal income allowance, which is 12,570, I think.
Yeah,
So
12,570 is your personal allowance. So yes,
yeah.
if you, but a lot of these people have jobs, right?
Hmm.
They'll be in Bristol, they'll be in London, so they will have already used their personal allowance. I talk to a lot of people that are like high earners that don't have a personal allowance anymore. You know,
Yeah.
as soon as you earn over £100,000 a year, in terms of your income, your personal allowance starts to get chipped away at. And this is one of the things that I
Yeah.
like to help people to realize, is how aware we need to be of our own personal tax situation before we then take on another investment. Because
Yeah.
it's really important to kind of look at it. It might be, and I talk a lot about this with Pete, is that it might be better to get access to the property market through ISAs, or
Yeah.
through kind of like a fund that invests into property, like the REITs, real estate investment trusts, because
Yeah.
they're not responsible, but you get kind of an at distance exposure to the general property market. And then, if you have got issues with your income, you can then use investment ISAs and things like that.
Yeah.
So there's loads of things and this is all of the sorts of things that I love to talk about in the Star Portal. So if anyone is listening, you are always welcome to come into the Star Portal. The Star Portal is £8 a month for you to come and join really, really knowledgeable, interesting people, talk about investing, talk about wealth, and help us to get confident with taking that next step. All right, whether you want to put money into your investment ISA or you want to save up and you want to take the leap to go and be a landlord for yourself. Now, Pete, let's go deeper on some of these things that I know you really care about. So you talked about markets are changing. We can touch on capital gains tax, but I think that's not a huge thing. If we're looking at, actually, it could be that, if you're looking to sell, you might be subject to some capital gains tax. But what are the pros? What are the pros and cons, would you say, of being a property investor? I think one of the things, sorry to divert here, one of the things that you talked about last time was whether you want to become a property landlord or whether you want to be an investor and do it up, right? There's these
Yeah.
different things that we need to consider when it comes to the pros and cons of investing into property.
Yeah. So I have a quite a complicated history with property, and I've invested in lots of different ways. And when I first started, the most efficient way was to own a house. I wouldn't say that that's the best option now. I think the new changes, although I'm still making a profit on that side of things, I don't think that that's the most beneficial way to invest in property now. Only because there are so many ways to invest passively, that you can invest in the entire property market, in all sectors at all levels, as opposed to having to decide where you're going to buy a house, pay a huge amount of tax on that house, make it worthy for renting out. It's a lot of extra steps to invest. Although when you have your own property, you do get, what I call the double payment, which is basically compound interest, provided you have a tenant that pays their rent, and the property value goes up, you do get compound interest. So you get the annual return on the rental income, and then when you sell the house, hopefully you get the increase in value. But again, when you sell the house, capital gains tax is 10% up to a certain point. When you pay capital gains on a property sale, a buy-to-let property, it's 18%. So it's nearly double, which is another consideration you have to take into account. It's very complicated, and it's very fair for the general economy the new way it is now, but it's incredibly complicated. And if you haven't been in it before, or you don't have a good advisor, um, or you're not a member of the Star Portal, obviously, then
No,
you
no,
wouldn't you wouldn't know these things,
that's
and
an
it's
important
difficult.
thing that you just said. I would never give tax advice on this. Any client that's looking to sell and has a capital gains, I will connect them with my tax
Yeah.
accountant that I trust, that I know is really good at working it out, because it is so complicated, because it's all of the years that you've built up that could go against your capital gains. It could be, have you lived in the property? There's all sorts of things.
Mhm.
It,
Yeah.
it, it really pays for you to
Mhm.
pay some money to get it done, because then you will save yourself money. If you do it yourself, you're more likely gonna get it wrong when it
Yeah.
comes to selling your property. And I do think having a really good accountant pays dividends.
Absolutely.
The
Yeah. They
con.
they know all the
Just
rules, and they
want to
know
touch
all
on
the new
something you've
changes.
just said as well, Pete, on in terms of the tax bands, because I think it's really important to be super clear on this, is it's 18% if you're a basic rate taxpayer. It's an
Yeah.
8% surcharge then, because normally when you have a capital gains, it's 10%, it's 18% in property, and then it's 28% when you become a higher or additional rate, which is an
Yeah.
8% surcharge again. So it's not necessarily double, because if you're an additional or a higher rate taxpayer, it's 8% surcharge.
Yeah.
That's not double, but so it's just knowing that there is a surcharge on property, and at the time that was viewed as, people were kind of kind of making gains at the expense of the rental market, or they were trying to
Yeah,
like take a little bit of an extra hit to try and put people off wanting to use rentals for for their own gains in
yeah,
smaller communities. It's like, you go to, okay, let's talk about this on a practical fair level. You go to Croyd, right? Croyd is the most amazing, beautiful kind of beachside community in North Devon. It's one of my favorite places down here. It is a ghost town in winter,
yeah.
right?
Yeah, it really is. It's really, really dependent on the holiday market. There's a wonderful community of residents there that live there
Yeah,
all year round, and
yeah,
a lot of our friends live there, don't they? But
yeah,
it's incredible going there in winter against summer. The contrast is amazing, and obviously that is so dependent on the property market because most of the houses in Croyd are holiday lets and
yeah,
they're empty most of the year. And this is what they're trying to discourage as a government. They're trying, and the previous government as well was trying to discourage this. Regardless of what people think of them, they know that it's not good for the economy for landlords to be getting rich. So they were these changes came in before Labour came in. So it is sort of a collective effort across government to make sure that these things don't stand. And the diversification and offering up these different passive income alternatives to actually owning a property. Those are the things that I also invest in that give a really good return, and it's a completely hands-off investment, and it's all managed separately. Um, there's a really good there's some really good people that run these companies that have all the experience, all the knowledge, all of the resources to buy houses. They let them out as holiday lets, they develop them. They have enormous companies, hundreds of employees. And as an investor, they run off investors' money. And as an investor, you invest as little as £10,000 in one of these companies, and you get the same rate of return as you would in a owning your own house, but you don't have to do any of the work. And obviously, you are still betting on the property market doing well. There's obviously still a risk, and it's not guaranteed return, and all of these things. The same way that nothing is a guaranteed return. You could buy gold, and the gold price could go down. But the advantage of it is that you don't have to do the work. You don't have to have the anxiety. You don't have to pay the same taxes. The stamp duty when you do a buy to let is absolutely unbelievable. It can cripple your budget before you've even started. And I spoke in the Star Portal. There are some really good ways that you can almost halve your stamp duty when you do buy a buy to let. But that's too much to talk about now. But we can go into that in the Star Portal next time if anyone wants to talk
yeah.
to me
I
about that.
think
I'll
we
happily
should go
explain it.
deeper on these things in the portal, Pete, because I think there's a lot of taxes, isn't there?
Hmm.
There's a lot of different taxes, and what you've just, my ears just pinged then, and I'm sure the listeners' ears just pinged, the fact that we think of passively, when we think of passive investment, sometimes we see the land owning a physical property as passive. I think what you said, it's not passive, it's really hands-on. It's like running a company. Whereas
Hmm.
to gain access passively, you either do it through your ISA, you go into a REIT and you gain exposure, or you can actually, there are companies set up where they are managed and you could put £10,000 into a company and gain access to that buy to let market. One of my clients does that. She's just set something up similarly. Debbie Nifton, she's doing that. Sorry, Debbie Shelley. So, there are these investment funds that are being
Hmm.
created where someone is doing the management, someone is doing the work, creating a buy to let,
Yeah,
um, creating those, not even the buy to let, it's the holiday market sector as well, which does give
yeah,
you a bit more of a premium, right? Because when you're doing like an Airbnb model, or a rent to rent model, some people doing these things as well. All of these different property terms, you can gain access to it without necessarily knowing all the ins and outs. And then all you are doing is you're buying shares in a company. Um,
yeah,
and then you have to understand the tax of the investment that you will then be subjected to.
yeah,
And usually they're set up as companies. Usually you have a share in that company. It's like an investment trust. It's different. It's taxed differently to the taxation of property ownership.
Yeah.
And it is complicated. I think, this is the thing. It can become so bamboozling, and really don't want to bamboozle people on the show. I think let's keep this simple because, a lot of the people that I follow me are, they're trying to grow their money for the first time. I think really keeping it simple, this could be a really great time if you are looking to do something with your money to go and buy an investment property, a smaller property, ones that are coming onto the market that are
Mm.
generally being dumped. There is a smaller, there's a supply and demand shift, and it might be your way of getting onto the property market.
Yeah.
It could be a future residential property for you. You could
Mm.
think of it as a buy to let now because you want to live in Bristol, but you might want to move back to Devon one day. So you might want to get a property in North Devon,
Yeah.
in a place that's not where you want to live currently, but is a good rental place. There
Absolutely.
are
Yeah.
people there. So I think there's all of these things that you can consider when it comes to investing. It has to be led from a place of what, and this comes down to something that Adam always talks about as well. What are your objectives? What do you want to get from your investment? What are you trying to achieve? What rate of return do you want to achieve? And make
Mm.
sure you always come at it from that perspective because if it doesn't make sense for you, you can't make it work.
Yeah.
You have to have that. You said there's two hats that you have, Pete. What's right for people generally in the world, and then as an investor, as a property investor, or as an investor generally, does this investment work for me in this
Yeah.
moment?
And I think it's the thing that I'm always preaching is that I talk people's ears off about this, but it's always the thing that I say is that the best way for me to, in my opinion, the best way to grow wealth is to avoid tax. The tax takes away so much from you, and there are so many legitimate ways you can avoid it. I mean, one thing that I could have said there is that when you do invest in one of these businesses for a passive hands-off property investment as opposed to owning your own is you can do it through an innovative finance ISA as well. You can invest in development projects through an IFISA. So any profit you make is tax-free, and it makes so much difference because then you might not get the double payment, but you're getting very close to it with an IFISA because you're not paying any tax at all on any capital growth that you make. So it's a really important thing to always have in your mind. Anything that you can do that is tax free is going to be such a good investment, even if the numbers aren't as high. If it says, oh, I can make 10% on this investment, this one I can only make 7, but this I could do through my IFISA, which means I'm not paying tax on that 7%. It's such an important thing to remember that if there's an opportunity to avoid tax, the same way that instead of investing in gold bullion, I say invest in gold coins and invest in currency that is classed as currency because it's the same amount of gold and it's worth the same amount of money as a gold bar or a gold ingot. But when you sell it, you don't have to pay any tax on it. And when you buy it, you don't have to pay any tax on it. And I mean, our group of friends, they must be sick to death of me talking about this because I always say avoid tax as much as you can. And if you're, like you said about these, savings accounts, if you're looking at a bank savings account and it says, look, we'll give you 3% interest a year if you don't touch this amount of money. But if the inflation is going up 3% a year or 3.5% a year, you're actually losing money on that savings that you've put in and you can't even touch it. So you have to find these tax efficient investments outside of banks and find ones that work for you and work with your level of free time and work with your level of risk sustainability. Make sure that you can manage the asset if it's a hands-on asset like a property that you own yourself, and find these ways around things. And we can talk about that in more detail in the portal. But
Yeah. If
it's such
anyone
a
is listening,
fundamental rule.
if it's an innovative finance ISA, all of these things, all of these different nuances. Pete is going to be in the Star Portal this month, the month of May, the fourth Thursday of every month. We have an investment circle on the fourth Thursday, 1 till 2 p.m. It's always recorded as well. So a lot of people come and join live. They ask Pete all these questions, and then you have that connection with Pete. If you want to talk to Pete, you need to come into the portal because we want you to be in there, and then you can have conversations with Pete, you know, and your knowledge is incredible. You have the whole of the Star Portal now with gold coins and silver coins. I have silver coins because I didn't quite have the money to go and buy gold coins because gold coins are obviously more for the coin. But I have 4 silver coins, right?
Fantastic.
It's these little things that we chip away at as we are
Mhm.
building up wealth. We have Dan that comes in and talks about Bitcoin, and I know that you want to learn about that, right? Because we
I
all have
do because
our
I don't know
knowledge.
enough about it.
Exactly. We all have our little knowledge sectors, right? And for me, knowledge is wealth. One of the things
Mhm.
that gives us the power is just having the knowledge and then knowing that we can go and talk to somebody about it. And you don't, we think we need to do everything. We can't
Yeah,
do everything. What we can do is one little thing at a time. And if we think, right, okay, I want to start dabbling into property, okay, come and talk to Pete. Really, really, really come and talk to Pete. Come into the Star Portal, find out what an innovative finance ISA is, because maybe that's something that we need to go deeper on. And then we can start picking away at some of these tax allowances. We're not
yeah,
here to give advice because we are not tax advisors, but fundamentally, I'm a chartered financial planner. I've studied tax for 20 years, right? Tax avoidance is legal. Tax evasion is not legal. Okay. So all of the loopholes and all of the rules, all of the allowances, all of these things that are there are legally there for you to use. You're just avoiding tax. It's like, if you were to walk across a road, you'd use a crossing that's put on the street to cross the road to avoid getting run over.
Mm. There
Right?
are literally like pages of things on the HMRC website that tell you how everything works with regards to any sort of tax question that you have. And NASA astronauts have a really good saying that I think about all the time that is the more you know, the less you fear. So if you don't know enough to not be scared of something, then either you can look it up yourself and you can do your research like I did, but I also paid for a mortgage advisor and I paid for an accountant and I paid for people to teach me these things. It doesn't mean that I kept using them after I'd learnt things from them, but I used them when I first started. For the moment, the way that my business is structured now, I don't have to use those people anymore. I'm comfortable with my the expanse of my knowledge as it stands at the moment. But if my business gets more complicated and there's something that I feel is out of my depth, then I will come and speak to Emma, or I'll speak if I went into the stock market, I'd speak to Adam, or I would speak to people that know more than me about the subject that I'm interested in, and I would try and learn from them. And then you're just saving money. I mean, how much work are you prepared to put in to save yourself some money?
I think that is the biggest tip that you've given today, Pete, along all of the amazing knowledge that you've given is don't fear, don't live in fear. It's okay to seek out knowledge. It's okay to speak to people that are more knowledgeable than you. And actually, it's okay to admit you don't have all the knowledge, right?
Absolutely.
I,
Yeah.
I've been in trading and stocks and the markets for 20 years, right? And I am the first person to say to anybody, I don't know it all. And it's okay to admit that you don't know everything. Because if you were just because we have all of these expectations that you should know everything, you should just know it. It's like, you know, how are you meant to know everything? And things are constantly shifting and changing. The
Oh,
rules
it's always
are always
changing. Yeah.
changing. That's why I love that you come in every quarter. You come on the show every quarter. You come into the portal every quarter because we want to get updates. We want to see what's moved. We want to keep learning. We want to keep asking questions. We want to keep challenging ourselves. And I'm
Yeah.
not in the stock market anymore. I run a wealth business where I'm coaching people on in a different way to the way that I used to do it. So I don't feel like I'm necessarily always going to be the expert, because
Mm.
we're never always the expert. Actually, what makes an expert is if you know more than the average person in the room. And Pete, by my goodness, do you know this topic? And that's why you are now your own expert most of the time. You don't need to pay for people, but when you notice that you want to pay for it, you will pay for it. And that's so important. I love that. And I love the NASA saying, what is it? Remind me.
The more you know, the less you fear.
The more you know, the less you fear. No one should live in fear.
And you're absolutely right that a lot of this stuff, like everything that I knew about property investment when I first started, nearly all of it, especially the tax stuff, nearly all of it is completely different now. It's the same as, you know, however long ago they used to say that smoking was really good for you because it opened up your lungs. It's the same thing. Like a lot of this stuff in 10 years from now will be completely obsolete and completely wrong. But it's all about changing the way that you think and learning new things and trying to stay on top of it. I know that we've covered a huge amount of different things, and it's a huge amount to take in. But once you start looking into it, you will remember it and you will get into it, especially if you ask questions and we can talk about it as much as you like. But it's just so important to try and stay on top of the
Oh, Pete, you know
of it
what
as
you've
it
just
changes.
taught me? You've taken me back to the very first moment that I met you. If I'd have known that I was running up that massive hill, because Mike was leading Run Club that day, if I'd have known if I'd have had knowledge that I was going up a massive hill and I was gonna like be testing my lungs, I might not have done it. Do you know what? I ended up talking to you and talking
Mm,
about tax. And then we were like, oh, this is good. Do you know what? If we'd have known and had that knowledge, actually,
mm,
maybe we would never have like become friends and you would never
yeah,
have been sharing inspiration. So there's the duality. Sometimes when we know,
absolutely, yeah,
don't face
yeah,
our fears, and knowledge can sometimes be a detriment because we sometimes don't do things, and that's the I was thinking, oh, there's a duality to this, and we live in a world of duality,
mm,
polarity. Things aren't always black and white. We do get it wrong. Again, sometimes even when we have knowledge, we get it wrong. But the thing that I want to leave you with here is that don't live in fear. Come and get the knowledge. You won't get it all always right and perfect. And let's just kind of run up those steep hills together, get out of breath, but be on the journey together. And that's what I always think is so, so important.
absolutely, yeah. And all of this stuff is it's anything investment wise, it is a casino. So you can win and you can lose, but why not go into the casino with a magnet? You can talk to people like Adam and talk to people like you, Emma, and you can learn these things, and you're going in with a massive advantage over what you might have if you just tried on your own. So let's
Life
talk.
is a casino. We do not know the next moment, okay?
Hmm.
We don't know what's going to happen. We don't know what Trump is going to say. We don't
Yeah.
know what tax is going to be like at the next kind of moment, right? All we can ever do is be in the present moment, make decisions based on current tax, current legislation, what our current needs are, what we currently need, work on that knowledge and try and block out all the fear because a lot of the stuff that comes out of people's mouths, a lot of the things that we hear is fear based to make
Yeah.
us live in fear. We have to create a place of being in the present moment and realizing, yeah, life's a big game. It's like
Hmm.
the Matrix. Let's treat it as the game that it is, the game of life. Remember that game? The game of life? Love that game. Let's treat life as a game. Let's have more fun with it. I do believe that the more we can come from a place of love, a place of fun, and also responsibility, and realizing that, I want to do this for the benefit of the good. I want a fair market. I want fairness. I don't want to be greedy. I want to care about the community. I want to care about my tenants,
Yeah.
but realizing that actually it's all a big game. Life's just a big game. Well, let's learn to ride the roller coaster of life and have fun with it. Ah, thank you, thank you, thank you, thank you as always, Pete, for coming in. Like I told you at the start of this, I had a blank canvas, and now I have a page full of notes. I'm always learning. I'm always thinking, my goodness, what can I do next? What can I invest into? I'm on this journey with you, Pete, with everyone that's listening to the show. So thank you. Is there anything you just want to leave as a little final nugget for the guys here today?
I think we've covered everything. I just yeah, I'm not going to say avoid tax again because I say it probably 10 times a day, but saving money is making money.
Saving money is making money. Plug your leaks. We talk about leaking money all the time. Thank you, Pete. And if you do want to speak to Pete, I've had a few messages where people have said, "Can I speak to Pete?" Come into the Star Portal. That is where Pete, you can speak to Pete there. If MP wants to speak to you further, that's up to him, but he's giving up his time to be on the show. He's giving up his time to be in the Star Portal. The Star Portal is £8 a month. The link to come into the portal is in the show notes, and you can come for a free month with Star 1 month at the checkout. At the checkout. So thank you, Pete, and I will see you really soon.
You
Namaste.
too, no problem.